what you want over the next 12 months in terms of your mindset and your health and your diet, it's no different thinking about your approach and your purpose and your objectives over the next 12 months with your finances. And actually taking time, as organisations do, to sit down and forecast and budget quite meticulously what's going to come in, where's it going to come from, what's going to go out, how can you control that, and looking at the position that you're going to be in, and perhaps also, I guess, the position that you'd like or want to be in 12 months' time. Okay.
Hello and welcome to another episode of the Mind to Lead podcast. And today, very excited as I'm sat down with Andrew Roche. Andrew has worked in banking and finance for over 35 years, and he is committed to helping people achieve financial freedom. Andrew is an incredible leader, and he believes that empathy is a trait that every single leader should learn. Andrew, it's amazing to have you on the podcast today.
Thank you, Georgie, and thank you. I'm very grateful for the opportunity too. When we first met a number of weeks ago and decided to do this, I've been very excited about getting together and having the conversation. But thank you for giving me the opportunity to share some thoughts.
Yeah, absolutely. And look, I guess the reason why I wanted to bring you on today is because 2020 has been a tough year for a lot of people, emotionally, spiritually, mentally, and also financially. And on my podcast, I address a lot about the mental health, the emotional health, the spiritual health, the physical health. But I thought this year I haven't really addressed financial health. And I truly believe in order to live an incredible life, a successful life across all areas, we do need to be thinking about our financial well-being as well as everything else. So that's really where I love the conversation to go today. And I know you are the man to be speaking with. So before we dive in, could you give a little bit of a background into who you are and what's brought you to Australia? Because you're clearly not from Australia, as am I not. So over to you, Andrew.
Well, I think it's a great place to start. Thank you. Thankfully, we've got the weather back today as we normally have. But I think that's it, Georgie. You know, it's the lifestyle. We had some friends who came here probably 15 years ago, and like many, where should we go on holiday this year? And that particular year, I think 2007, we went to Australia, to the Gold Coast, to see those friends and see what sort of what a holiday would be like. And it literally was just a holiday. But I think we went back with some sparkle of what life might be like. And we had two young boys at the time. And I think a couple of years later, that spark just ignited and emerged at the same time in our minds on one wet Sunday afternoon. And we decided that we should at least explore and give it a go. I'd been at the Royal Bank of Scotland for 26 years. It was just before the GFC. It was a perfect storm in terms of, just the right time to move. And here we are. And since we arrived in 2009, we've got two more beautiful children to go with the two good boys that we've now got, who are almost grown up now, and two Australian children who don't know what it's like living in England. They only know the Gold Coast. So it's a great life, great work-life balance, and a great opportunity. Since I've been here, I worked for Westpac for many, many years, until a part of that business closed down last year, and unfortunately was made redundant. Taught me many lessons, made me a stronger person, gave me a lot of huge, resilience and belief and determination. And here we are now, living the dream.
Absolutely, living the dream. So your journey there as well, because I think that you come from the UK as well, and I get this a lot, and I don't know about you, but people look at Australia and they go, oh, what a life, sort of, I'd love to move to Australia. And a lot of people have, a lot of reasons why they can't. So you just said one Sunday afternoon, we just decided, do you know what, let's just do it. So how did that come about? Because I feel like so many people have so many, not excuses, but reasons why they can't do things. So what did that move look like to you? You're moving away from all your family. You're pulling your kids out of school, presumably, starting all over again. So what did that process look like?
It's a great question, and I think it's a topic that many people would love to explore and sit there thinking naturally of the reasons why not to do anything in life. We firmly believed that it would be the right thing for us and we put ourselves first. Now, some might argue that that's selfish, but I think we had such a strong, powerful purpose about what life we wanted to lead for ourselves, and probably more important, Georgie, for the boys at the time. And we knew that we didn't feel or believe we could get that lifestyle in the UK. As it happens, I was in the point in my career where there was a voluntary redundancy opportunity. And that meant that I did have some financial freedom to be able to use those funds to help move to Australia. It wouldn't have been impossible without that, but it helped. So I think we tended to focus on the reasons why we should do it, why we wanted to do it, and we had a very, very strong purpose about making it work. I think often people allow your mind to drift towards the reasons why you wouldn't. And that can be anything from, I've got a safe job, might not get a job in Australia. What about my family? I'll never get to see them. And I think it's easy to look for reasons why not in life, whether that's emigrating to another country, which I actually look back on as being, you might argue it's courageous, or you might argue it was stupid. But I think, courage is just a bit of stupidity with a strong purpose, in my view. And we made it happen. There was lots of things in the build-up to us moving that we could have gone, that's going to go wrong, that's going to go wrong, that's going to go wrong. And I look back and think, how did we do it? We just eliminated that negative negative component from our thinking, and we just had this absolute belief that it was going to work out fine, and it did.
Okay, we could just stop the podcast there, and already I feel like you've just given so many people so much like hope and inspiration, because you said some key things that I talk about all the time, and I probably sound like a broken record to my audience, but you said belief. You focus on the positives. You focus on the reasons why you should do something, or why you wanted to do something. You had that purpose. You didn't focus on the things that could go wrong. You focus on things that could go right. And I think you're so correct. In any decision that we make, we've always got two choices. We can focus on the reasons why not to do something, or we could focus on the things why the reasons why we should do something. And that's obviously what you focused on, which is why you're here in this position that you're in, living this incredible life. So I think that that's just such a powerful message to anyone who's listening to this right now, is that it's what you choose to focus on, and it's like where focus goes, energy flows, right? So if you focus on the negatives, you're going to get more negatives. You focus on the positives, you're going to get more positives. So that's just such powerful advice. But you also said as well that you were in a good financial position. So that doesn't come from, just not really having a plan and not really being good with money. And people have a very interesting relationship with money, I found over the years. A lot of it stems from their childhood, their beliefs, their parents' beliefs around money, or there's just enough, or we can't afford to do that, or money is evil, or and I've always had, I guess, a very open mind towards money. I've seen money as opportunity. I've seen money as a way to give back. I've always had I think a good relationship with money, which is probably why I'm in a strong financial position now. But let's talk about the financial piece now, because you did say you're in a good financial position. So what had you done up until that point in your life to be in that position where you could take risk and you could go for your dreams?
Yeah, cool. I'll just say too, on that, when I was a kid growing up, I was born in Salford, and for any listeners who know the UK, they might think about Salford and sugar. It wasn't the nicest place in the world, and I'll get some stick off some of my friends in the UK. But I thought we were well off. We grew up in a very modest lifestyle. My dad had 3 jobs at one point. My mum was bringing me up and worked part-time, and they probably didn't have a lot of money, and a lot to show for it many years later. But I thought we were well off. So I think that taught me the value of money. And that's the seed that is planted there at a very early age, to actually appreciate those pound signs, those dollar signs, and actually be, I guess, not frugal to the point where you're afraid to spend any of your money on anything, but quite careful. I suppose carefulness is a really important characteristic of being able to manage your money well. I think that's where it all started for me, and you can develop that skill set as you as you grow older if you've not got it in you from an early age. But I think I learned the importance, I think, of being careful with my money and not just going out and spending on anything I wanted and having it now. And I think that's what worries me for my children too, is that they're growing up in an age where instant gratification, instant, you get something online today and pre-COVID it'd be here tomorrow. And, you pay for it on a card, on a piece of plastic that has no importance. So I think educating children's a really important thing. But I think for me, being careful and making sensible financial decisions along the way, but also being proactive. So one of the things that I was keen to talk about today is, I've spent 35 years in banking and finance, and I've dealt with many customers, many bankers, many financial planners who are all looking after different ways to help their customers. And some of the lessons that I've learned as far as finance over the years is the importance of having a really proactive approach with your money. So thinking about what you want over the next 12 months in terms of your mindset and your health and your diet, it's no different thinking about your approach and your purpose and your objectives over the next 12 months with your finances. And actually taking time, as organisations do, to sit down and forecast and budget quite meticulously what's going to come in, where's it going to come from, what's going to go out, how can you control that, and looking at the position that you're going to be in, and perhaps also, I guess, the position that you'd like or want to be in 12 months' time. Okay, organisations do that very well. But what you don't do then is just plan at the start and see how you get on in 12 months' time. You wouldn't do that with a diet. You wouldn't do it with your health. So having regular, I guess, tripwires or moments to stop yourself and intelligently reflect on the progress that you've made, probably monthly. I think more than that for me personally is too often. But once a month, I'll just look at how we're traveling towards the goals that we've set, the financial goals. So you can put dollars around that too, right? So just as you're a big believer in setting your goals, and I know you're starting to embark on the 2021 goals, is you can do that with your finances too. And I think if you get those ingredients right with a strong purpose and a very good rhythm in place that you're not afraid of, that's a good start. Picking up on what you said at the start, George, some people, finance can create tension and stress for some people, and what you don't want in life is to have a good, healthy lifestyle, a good, solid mind, good exercise, but then your finances is the component, is the piece that's keeping you up at night.
And unfortunately, that is one of them. That's the biggest thing that couples argue about. It's a really big factor for a lot of people, and unfortunately, a lot of people have lost their job this year. A lot of people I think are thinking, wow, like maybe I have overspent, maybe this big house I live in and there's 2 cars on the driveway, do I need all of this now? So if you're somebody who is in a bit of a financial strain at the moment, what sort of advice would you give to somebody who perhaps has got some debt, who wants to get back on the straight and narrow and is just feeling a little bit overwhelmed and not sure sort of where to start? What kind of advice would you give?
Heaps. I mean, we don't want the podcast to go on for 3 days, but it could, in essence, because, there's so much to perhaps go through. I think the starting point is a bit like what I've said already, is I guess, getting your mindset right. You've really got to tackle your finances with a positive mindset, not an afraid, apprehensive, the numbers aren't going to look good, so I'm going to do that tomorrow because I'm not going to like what I see. Because you're overspending, or there's things that you need to do that might take a bit of effort, a bit of time, and perhaps something that you're not comfortable with. Maybe you're not comfortable ringing the bank. Maybe you're not comfortable engaging with a broker or a financial planner. So I think having a good mindset, getting yourself in the zone, if you like, with some good, clear purpose and attacking the challenges is probably the starting point. The second thing I'd do then is start to budget. I'd really dissect everything that you're spending your money on, because your income's pretty easy to work out, right? And unfortunately, at the moment, if you've not got any, perhaps I might get a chance to talk about, some of the hardship and Centrelink stuff later today, but it's your expenses. So I think, first of all, really being clear about your fixed, really being clear about your variable, being really clear about your non-negotiable expenses that you have to pay for. You have to feed your children. You have to feed yourself. You have to There's a range of fixed expenses that you have to pay for. You just have to. But then being really brutal about the variable, going through your bank statements and actually having whatever process works for you, was it necessary? This necessity approach. I think what you can then do is start to work out, if you are in such a difficult position that you need to really strip back your expenses, the objective is to try and get it back to as little as possible for the moment. So if you're out of work, it needs to be extreme. If you're in work but you're just trying to save to put yourself in a better position or create more disposable income, you can do it as a nice to have rather than an essential. There's actually a range of apps that can help you with this now. So, my old-fashioned do it on a piece of paper or an Excel spreadsheet is the old way of doing it. But for the more modern digital era, if you looked at a website called choice.com, and there's a website called Nerd Wallet, N-E-R-D, Nerd Wallet. There's others. They'll just point you in the direction of giving you some ideas of how you can actually use digital apps, technology to help you budget, help you manage your money. Some of the ones that, most of them are free to download. Some that you actually pay a small fee for on a regular basis will link into your bank accounts, and they can do amazing things like, they can allocate funds into different savings accounts each month. There's other ways when you use your card, and you pay for something, it can allocate a little bit extra. It can round it up to the nearest $10 and put money in your savings. So there's a range of really smart, efficient ways to budget and reduce your expenditure. But also your bank. I was having a look at a few different bank websites this week, and there's lots of budgeting tools and advice that the banks have put on their websites too. That's the starting point.
That's really good.
There's other things that you probably, let's explore some of those today, like the big ones, like your mortgage and credit cards and things like that we'll get to, I think.
Yeah, absolutely. We'll definitely dive into that next. And I just want to say as well, I do think it's really challenging for people these days. We live, like you mentioned before, we live in this era of instant gratification. We've got, companies like ZipPay, Afterpay, credit cards, we can just, anything we want, we just tap. We don't even we just literally just tap. How easy is it to spend money, right? And I remember when Kai and I started our first business, we didn't have a lot of money to start our first business. I got let go from my job and quite abruptly, and we ended up having to get flatmates in to help us pay our mortgage. But we looked at our expenses, we sat down and we were like, we did it the old way. We got the spreadsheet up and we're like, right, okay, we're spending $100 a week on going out for breakfast. Well, that's going to go. We're spending X amount going out for dinner. Well, that's going to have to go. And it was really heartbreaking, but actually it was a really eye-opening thing. And for about 6 months, we didn't go out for breakfast. We didn't go out for dinner, but we just worked. We just got our heads down and we worked. And we, then eventually when we got the business to a point where we could start taking a salary, the flatmates, some left our apartment. But I remember that time, I look back on that time in a really humble way, because it did make me think that, all these things that I'd taken for granted that I could go out and do, I couldn't do anymore. So when I then went and did them, I was like, wow, this is amazing. And actually, those 6 months of my life, I do look back really fondly on, because I'd never really had to think about money in that way before. But it was a really, really good experience for me to go through. And goodness, if I can do it, I think anyone can do it. And it, it was quite confronting. But yeah, having that budget, knowing what you're spending, and being really aware and conscious of your spending as well. I think that's a really, really good message to send to people who are struggling right now. But I just want people to hear that everyone, I think, goes through something like this in their life. And I'm here to say you can get out of it. Don't lose hope if you are struggling financially right now. There's a way out. And I think, like you're saying about just getting clear on your spending, be really strict with yourself, but there is a light at the end of the tunnel. I just want people to hear that. So that's really great advice. Right. So let's go into mortgage and things now as well. So if you've got I've got a mortgage, and I mean the home loans are dropping every month. I swear I can't keep up with it. So yeah, what sort of saving can people be making there on their homes?
Well, it's been a crazy few years, probably the last few years, as rates have continued to fall. I think the way I look at mortgage is that, it's linked to your house. Your house is your biggest investment in your life, and it's the asset that you'll nurture and look after the most, or you should, after your partner. and and the one that you'll hold on to for a very long period of time. You really look after it. And my view on the mortgage is that the mortgage underpins the purchase of that asset. So the mortgage is the biggest loan and the longest loan that you'll hold in your whole life. You really need to look after that too. And yet people often don't. People will take out the home loan and life's busy and people don't do anything with it. And the one thing that's for sure is often, not always, but often your lender won't engage with you to give you a better deal. So you've got to go and proactively make that happen. There's different ways that you can do that. I think the first thing is, when did you last review your mortgage? Have a think about that. And are you confident that you've got the right product with the right features for your circumstances, and are you getting the best interest rate? Some of the interest rates at the moment can vary by 1% between what you might be paying at the moment and what's available to you, depending on a range of factors. So there's factors that are really important here, like your income situation, your employment situation, your debt situation, what's happened to your property value, your loan to value ratio. So in essence, the more equity you've got in your property and the more stable your employment is and the lower your household expenditure is, the better the deal you'll get. But that's probably never been any different, Georgie, for all the time that I've been in finance, right? But what you can do is make sure that, first of all, you go back to your lender, whether that's your bank. There's many lenders in the marketplace these days. It's not just the major four banks. There's a lot of new organisations entered the mortgage market in the last few years, because there's a lot of hot activity, and refinancing is probably the hot topic at the moment. So I think the first starting point is go back to your lender, have a conversation with them about, have you got the best deal? Is there anything better that they can offer you? That's a good starting point. The second option, which is becoming more popular, or more and more popular, is to engage with a finance broker or a mortgage broker. I'm not going to sit here and say which one, but there's an abundance of choice. Simply, if you just Google, who's the best mortgage broker in my suburb, you'll probably get a list to choose from. Look at their Google reviews, see who's got 5-star. Chances are most people would know someone who's engaged with a broker. So if you just go around and ask friends and family, or people at work, have you used a broker? Chances are you'll find a good broker. Okay. And the difference between those guys and the banks is that they've got access to a range of lenders. Doesn't mean they'll guarantee to get you the best deal every time, but they've got a different choice. So those are the two options. Third option is do it yourself. If you feel like you've got time and the energy to sit and look at comparison websites like Rate City, Select.com, and iSelect, there's more. There's plenty to choose from. You can apply online, and there's it's a lot easier than it used to be to do an online application. For some households with a typical mortgage of $500,000, for example, you could switch your home loan to a different lender and save over $5,000 a year in interest costs, and that's not insignificant. And that money could be put to good use in terms of paying down some short-term debt, or putting more into super, taking out some more insurances that you couldn't afford before. There's a range of things to do. I think some other advice that I would give on your mortgage, though, is that, those scenarios that I've painted, Georgie, are if you're in a healthy financial position in terms of stable income. And what if you're not? What if this year you're not working at the moment, and let's call it hardship, or even extreme hardship? Don't be afraid to pick up the phone and talk to your lender about what's available. They're very sympathetic this year. They've probably got bigger ears than they've had for many, many years on listening to your situation and being empathetic and sympathetic to how they can help you. And there's things that can be done. They can put your mortgage repayments on hold for a period of time. You need to understand the consequences of that and the implications, but they're there to help. And my message is they're willing to help as much as they ever have been before. The last thing I would advise people to do is, interest rates are low. Don't overcommit yourself. The banks have still got servicing criteria where they'll not be looking at your ability to pay the loan based on 2%. they'll look at your ability to pay the loan on a higher rate. But what you can do, and one thing that I've seen many clients of mine over the years do, is pay more than the bank asks you for. So if your loan repayments are $1,000 a month or $1,500 a month, and you can afford to pay an extra $200 or $300 a month, you could literally shave years off your mortgage at the later stages in 20, 25, 30 years. You might save several years repayments off your mortgage, and that can add up and be quite a large amount. So probably a range of things that you can do, but I think again it's back to being proactive, and if you're not sure what you're doing, engage with a professional who does.
That's really, really good advice, and we've actually just remortgaged as well, and I think now we're saving an extra, like I think $200 a month or something, which that's a couple of breakfasts, that's a nice dinner out, like that's the way I look at it, right? Okay, well, great, I've got that extra money to spend on a nice experience every month, or invest it in stocks and shares and things like that. So let's talk about investments now as well. What's your take on investments? Because there's a lot of people I know saying that right now is the perfect time to be investing in more property and investment property and stocks and shares. What's your take and your personal opinion on investing, and are there any good investments right now that people could be considering?
I think two things spring to mind, and they're very sort of deep rooted, sort of fundamental things that I was taught many years ago as a financial advisor in the UK, is diversification. Not putting all your eggs in one basket, having a range of different asset classes. And there's different things that you can invest your money in. You can buy property, you can buy shares, you can put it under the bed, stick it in the bank, put it on the horses. We've got a great casino down the Gold Coast. There's a range of different ways to invest your money. Okay, diversifying what you do across a range of different experiences and putting your money in different direction really does has a huge impact on averaging out the risks in many ways of not being overexposed. So, you could go out and buy Qantas shares if you want. They're pretty low, but if you put all your money in Qantas shares, who knows what might happen? Might do great, might not. That's not advice, by the way, for any listeners that don't go and buy Qantas shares. So I think, diversifying your investments across a range of opportunities is always a good thing. The other thing you said about timing, timing for me has always been really poor advice. Okay. Someone else said to me many years ago, it's the time in the market, not timing the market. Nobody's got a crystal ball. Nobody knows what the stock market or the property market or interest rates are going to do. You can listen to many views, you can form your own opinion, and you can make predictions based on the past and based on evidence that you've got in front of you of what you think it might do. That's called investing, right? And when you invest, you don't know what's going to happen in the future. There isn't anything that's a safe bet anymore, even red or black at the casino. It can go one way or the other. So I think, being invested for lengthier periods of time has its benefits than trying to find quick wins to make a quick buck, and maybe investing in a company that you think is going to, double in value in the next 12 months to be immensely disappointed. My best advice to any listener is get yourself a good financial advisor. This is really hard to do it on your own. It was easy for me. I was in the banking and financial services game. I'd done qualification. I knew, what I was talking about. I could do that myself. And even I've made mistakes. Over the years. So I think get yourself a good advisor. A good advisor will look at your situation holistically. They'll take everything into account. They'll look at your goals and objectives for the future. They'll identify solutions that are aligned to help you achieve those goals. And they'll find some products that align with your views on risk, the level of risk that you're prepared to take with investing. And if they're good, they'll put some good solutions and recommendations in front of you and help you find the right products and investments that are going to be right for you for the long term, not the quick wins.
Again, another really crucial piece of advice there. Think long term, not short term. I think that's what a lot of people do, is they'll see an opportunity and they'll pour probably more money than what they can afford into a stock that they've heard is doing really well, or into a new area that's apparently up and coming, and they make poor choices and poor investments. And I think that you're so right about diversifying, and that's something that me and Kyle have started to do this year, which has been super powerful. But I think that it's also having the long-term approach. Like, I'm not investing in stocks and shares to think that I'm going to pull outdoor next year and be a millionaire. Like, I'm like, that money is just sat there doing its thing. In 20-30 years time, it will be our retirement money, right? That's I've got a very long-term approach to investing, but I think that a lot of people are doing it maybe because they want a quick win, the quick buck, and that's not the right approach when it comes to investing. Because as well, I think we're all living longer now, which is amazing. But I read a stat the other day that so many people get to retirement and they can't support themselves. They have to rely on family, and that's really, really sad. And that's why I did want to get you on today, because this is happening more and more and more. And I think that it's what we do today. It's picking up the phone and calling your bank. It's, if you are out of work, it's looking, like you said at the start, about opportunities. Where can I earn some money? Centrelink, just unfortunately, a lot of people are going to have to sort of maybe address the ego and swallow the pride and just and go and do these things, because it's what you do today that matters. And let's touch upon that as well, because you did say about the Centrelink piece at the beginning. So if you are listening to this right now and you're like, well, I don't have a mortgage, I don't have any money to invest, I'm really, really in this position right now, what kind of things are out there for people that maybe would help them if they knew about it?
Yeah, cool. I mean, look, Centrelink's a good place to start, right? Because there are entitlements, and it is about being humble. It isn't about worrying about, letting your ego get in the way of something that you're entitled to. And, if that was me, I'd be thinking about my family, not just me. So, yes, it's me that's entitled to perhaps job seeker, or maybe you're entitled now to family assistance that you weren't before. I think put your ego to one side and do your research. Now, the one thing's for sure is that nobody from Centrelink is going to track you down and ring you up and tell you about all the things that you're entitled to financially from Centrelink. That's not going to happen. What you've got to do is take some time to have a look through what often are quite difficult to navigate websites, I've found in my experience. They don't make it easy. Sorry, Centrelink, but they don't make it easy. And it can be quite complicated to work out what you're entitled to. And my advice is, if you're prepared to ring the 132, whatever it is number, and wait for 45 minutes to an hour to get to speak to somebody and talk about your situation and talk about pragmatically what you're entitled to, I reckon they'd be pretty helpful to do that. Alternatively, the queues around the block when COVID hit at Centrelink, unfortunately, those queues aren't there anymore. So, pop down to Centrelink, go and see a human being, have a conversation about your situation. And there's a probability that if you're not in work and you're looking for work, you'll be entitled to job seekers unless you've been made redundant, in which case you have to wait until that redundancy's been used before you're entitled to it. Chances are, if your income's fallen significantly, you might be entitled to some family assistance that you weren't entitled to before. And your children will be entitled to things like dental assistance and things like that. So I think do your research and invest the time. Don't ignore it, thinking you're not eligible.
Yeah, and that's really beautiful advice as well. And 2020, I could keep on saying it has been a tough year for a lot of people. But I think that the key message that I think I want everyone to hear from this podcast and this incredible conversation with you is you have to take action. You have to be productive. These opportunities, these investments, these things aren't going to come to you. You have to have your mindset right to take the right action, to take the first step. So, Andrew, let's just tie up this podcast now. Like, it's coming into 2021. Let's be honest, it's not going to maybe get any easier. We don't know what's going to happen. We don't know what's going to be coming our way in 2021. So what's the key sort of things, that the last piece of advice you can give to people to foolproof their finances as much as they can in 2021? What could people be thinking about? What should people be doing to make sure that they do set themselves up for success financially in 2021 and beyond? big question, I know.
It's a very, very big question. I mean, look, it's positive, negative. And what I mean by that, Georgie, is that, to be better off financially, you either need the positivity of more income or the negativity of less expense. And I think, focusing on, what sort of things can I do that would generate more income? And that's such an easy thing to say in a few words, such a hard thing to do in reality. If you're not in work, keep believing, keep trying, keep believing in yourself that you can find something that's going to work for you. Think about your skill set, think about the things that you can do, but there's always a way, right? So, I mean, be humble. A friend of mine who was at my previous employer when we all got made redundant 18 months ago, he was quite an experienced leader of a team. And he's now got 2 jobs. One of those is checking loan applications for one of the banks. And the other job is working in a retail men's fashion store. Very different jobs that he had before. Some might argue quite humble jobs to being in a leadership position, but I admire him incredibly for rolling his sleeves up. So, one of my messages is to think outside the box and be prepared to roll your sleeves up. That's not gonna do anyone any harm. But back to my point earlier around really attacking your finances, really attacking them head on and looking for as many ways to strip out expenditure that you can will really make a difference. And as you said earlier, it might be a bit painful and a bit uncomfortable. It might involve some conversations with your children about why you're cancelling the Disney Channel. But these things are important. And actually, I think if you're in that situation, don't be afraid to do that. I think the resilience and the strength that you will give your children in this moment, if things are that tough, will be such valuable life lessons for them when they're older. You wouldn't wish this on anybody if they'd lost a job because of COVID, but you can use those life lessons, and your children might have dinner time conversations in many years to come to talk about how tough it was, but how much more they appreciate the value of money and the time that they went through when mum or dad might not have been working in 2020, 21. I think the best thing you can do is just tune into some of the work that you do around the power of the mind and not let what can be the worry of money drag down all the other good things that you're trying to do. Being in control of your finances is just part of the equation for me.
Beautiful. And I also just want to say this as well. I think it is having gratitude that we do, if you're in Australia, if you're in the UK, if you are, listening to this right now, let's be honest, you are in a stronger position than most of the population in the world. And I think that we can get so caught up in our own lives and our own worries and our own concerns. And sometimes what we just need to do is just take a bit of a step back and go, well, do you know what? I'm grateful that, I live in this country that has all of these things in place to help me. I'm grateful that I've got that friend to call upon, or I'm grateful that I can tune in and listen to a podcast like this. It's going to help me. I'm grateful that I've got a phone so I can make a few phone calls. And I love what you said as well about pulling up your sleeve and taking action. But I think as well, it's coming from a place of appreciation as well. I think that's really, really important. I think it's really so easy to get that sort of victim mentality of, why is this happening to me? And it's like, try and take a step back and see the bigger picture and know that if you're listening to this right now, you are in a stronger position financially than most of the rest of the world who don't even have running water. There's always something to be grateful for. So I think that's really important as well. But I have loved speaking to you today. It's been absolutely incredible. So much value there for everybody who is prepared to take action and look after their finances in 2021. And hopefully, look, the economy prospers. Hopefully, everyone is going back to work and it's amazing. But, there's always things that you can be doing to looking after your financial well-being. And I think that you have given some incredible advice today. So, Andrew, thank you so much. Now, if people want to reach out to you to get your advice, your tips, your tricks, and any coaching, where should they go to contact you?
Well, that's a good question. Well, I'm on LinkedIn, so anyone who's on LinkedIn can find me and connect with me, send me a message. Apart from that, my advice is don't reach out to me. Find yourself a good financial advisor, find yourself a good broker, find you someone who you can, work with, who's close and you can trust and build a relationship with. That would be my advice, to reach out to me.
Well, you're such a humble, beautiful man, and it's been an absolute honour. So thank you so much. And I know my listeners would have got a lot out of that. So yeah, thank you so much.
Thank you for having me on.
Thank you so much for listening to the Mind to Lead podcast. I really hope you got some great takeaways and key learnings from this episode. To help us spread the message, please give us a rating and leave us a review. We love reading your thoughts and your insights and your learnings. And look, reach out to me. Reach out to me on LinkedIn. I'm Georgie Hubbard. Reach out to me on Instagram. I'm Georgie L. Hubbard. Let's connect. I hope you have an incredible day, and I look forward to speaking to you all again soon.